All right, welcome everybody to this short. This might be up to an hour. A webinar on reporting crypto on your taxes. Our special guest here is Clinton Donnelly, associated with CryptoTaxPrep.com, and we spoke earlier this week about putting this together. Every situation where people invest in crypto is going to be slightly different depending on the exchange they use, where that's based, and what service they use. But this webinar is specifically geared towards Uphold clients and specifically Heleum clients. But since we definitely wanted to have competent advice, we went to a professional, and so thank you for making your time available, Clinton. We hope everybody gets something out of this, and so we're going to go through. I'm going to turn it over to him. He'll have a short presentation. At the end, we'll just have questions through the end of the hour, and then any follow-up questions, you can send them to me. And if I need any advice from him, I'll be arranging that. Okay. So take it away, Clinton. Thank you.
Thank you very much, Pace. I want to introduce myself, and then I'm going to go through a few slides talking about the documentation you'll be receiving from Heleum, and then answer some broader questions that a lot of people ask me about how to handle crypto taxation on their taxes. And then it'll be open for any questions you want to ask that's on your mind. So my name is Clinton Donnelly. I am an international tax law advisor. I am an enrolled agent licensed by the IRS to represent taxpayers worldwide, and that's exactly what I do. I have clients in over 40 countries. I help them with tax problems and tax preparation. I also have a law degree specializing in the international laws of finance and banking, which are very relevant to the international cryptocurrency marketplace. So I want to tell you a little bit about some of the emerging things. And a lot of people have been asking questions about how to report crypto on their taxes after last year's tremendous run-up on their crypto holdings. And now with the market on many of the cryptos down a little bit, they're concerned about how do I handle that? How do I respond to it? And I'll give you some ideas. So let's go forward to, there we go. First of all, what kind of precipitated the need or the urgency, the need's always been there to report crypto transactions, is that Coinbase, a U.S. exchange, lost in court their opposition to the IRS's demand that they turn over records on their client transactions. And here's why. The IRS looked back, and from 2013 through 2015, they determined that roughly only 900 tax returns had been submitted in those 3 years that contained anything that was cryptocurrency-like. And they know that Bitcoin had 5.9 million customers. So they think a lot of these customers aren't reporting their taxes. So this was the basis of the summons, and they went to court. Bitcoin lost, or Coinbase lost, and they're turning over, starting in 2013, really actually to the current day. I was talking to a client who got one for a 1099K from Coinbase for 2017 as well. And let's talk about that. Heleum is sending out, being proactive in sending out 1099Ks to your clients, you guys, this year.
For to clarify that Uphold is the one making those available.
Stand corrected.
Yeah, that's
so. The reason for receiving one of these is if one of two events occurred. If you had over 200 transactions on the exchange, or if you sold or exchanged over $20,000. Now that number is not your profit, just merely that you sold or exchanged $20,000 to begin with. So that's kind of what is precipitating this. Now let's look at what one of these 1099Ks looks like. A 1099K is one of a large family of 1099 documents, which are ways that companies report to the IRS about money they've given to people. And in this illustration, we see here in the red circle in box 1A, the gross amount that was paid on sales or transactions with this client. This client obviously did pretty well, $978,000, very good. And you see the rest of the information on this 1099 is not terribly important. I've blanked out the payee's information, but you see it breaks it down by month when they made their profit. None of that is important on your tax return. When you do your tax return, you're going to enter, either you or your accountant, if you're, however you do it, he's going to enter a 1099K. It's going to say Uphold HQ, $978,112. That's all they're going to enter. Now, this is a reporting of income. A 1099K is income. So if you would get one of these if you sold over $20,000 on eBay, or if you sold it on Amazon, or any of a number of these sorts of exchanges. You know, it doesn't necessarily mean that's your profit. It's just merely that you made that much income. Of course, you might have expenses. So it's a very common form if you've never seen one before. Now, if you, there we go. What we need to do for your taxes is you need to report your gains and losses on your transactions on Schedule D. And if you've ever had a brokerage account, Fidelity or Merrill Lynch, Schwab, you're going to have had a very large brokerage statement that comes to you at the beginning of the year, listing all your transactions for the prior year. And this is the same sort of information that we have to enter for crypto transactions. As you see illustrated here, this person had a fraction of Ethereum. Column B, he bought it on July 28th. The next day, column C, he sold it. Proceeds is how much it was sold for. These are the numbers that were added up to go to the 1099K. So then the second column is E, which is basis, which is how much you paid for that particular coin. Basis is a fancy accounting word that means how much it cost you. And then all the way over on the end, column H is what the gain was. And this is what you're going to pay capital gains taxes on, is what the gain amount is. So it's important. That's the key number we're trying to get to. If you purchased a coin on the Uphold system and then you sold it on the Uphold system, then they would know both the cost and the proceeds amount. But if for some reason, whether it's with the Uphold or if you're working on another exchange, you transferred in a coin that you bought from somewhere else, and you transferred it here, in this case, to Uphold, they would not know what the cost basis was. So, if you were very loyal and bought and sold completely with an Uphold system, you'll have a very useful statement. But if you are moving in and out, then it creates some complexities that you'll have to resolve, you or your accountant. Now, also, I believe, if I'm right to pace, that they will receive a spreadsheet from Uphold, which will look something like this, correct?
Correct. So they'll have a gain and loss statement, anybody that received a 1099. I don't know if they're making that available to anybody that didn't receive a 1099.
Okay.
But it's possible for other people to get it in a roundabout way.
All right. So let's say you pull it manually or you get it sent to you. This is the information you're looking at. And I'm starting on the leftmost column. And we saw from the 8949 document, we need to see when you bought it, when you sold it. The key message, is it short term or long term? And then what did you pay for it, and what did you sell it for in order to get to gain? So there's really these 5 pieces of information. On this spreadsheet, we see here on the left, date sold. Okay, that's what that is. Now, the actual time actually lists the time of date as well here. I hid that, but it will tell you the hours, minutes, seconds as well. The description of the transaction, and as you see, the first one here is a receiving of $1,300 US from the user. So this is not a reportable transaction, the first one, which is why if you can look across to the side, there's nothing in the basis and proceeds column. The next several documents are entries are sales and exchanges. The second line item, the person transferred $279 to, I don't know, do you see this if I click that button there, Pace?
Yeah, slightly.
Okay.
There's a circle on the left side. Yeah.
Okay, on the left. So these $279, he bought a fractional amount of Bitcoin. And if we scroll over here to the red box, we have the basis of 279, which is what he originally bought the Bitcoin for on Uphold, and he sold it for 263. Or this looks like it would have been a slight loss. And then, so the key numbers that you need are the numbers in the cost in the proceeds, or the proceeds means sale price there. Now, Pace and I were talking earlier, and that these numbers do not include your transaction fees. And that's important because you want to subtract those out so that you can have a smaller gain to be reported to the IRS. Now, the transaction fees vary. Pace was telling me based on the types of coins and the situations, but it would be adequate for the purpose of the IRS to use an average cost fee, which he suggested of 1.27% as a cost fee. Now, that would be a cost on the purchase if you purchased it on Uphold, and a fee on the sale if you sold it through Uphold.
I believe that this column does show the amount after the fee is paid. I can confirm that with Uphold. I'm pretty sure this one is the reason we brought it up and we discussed it was that it marked the difference between what was reported on the 1099 and what this spreadsheet showed.
Okay.
As far as the total volume incurred. So this isn't showing the fees as part of volume, but I believe it is counting it as part of the proceeds, because the conversion happens, and what the result of the conversion is what's shown.
Okay. All right. So what you're saying then is that the fees are already built in and included in the reflection of the cost of the proceeds here.
Yes.
Okay. Okay. And that's good. So the information below on the transaction fee, et cetera, is not going to be relevant based on what Pace has said.
Yeah.
But if you are working with other exchanges, and you have done work with multiple exchanges, and you get a similar type of statement from them, you need to ask yourself, were the fees included in these prices? A lot of exchanges don't include it, or they break it out separate, and you have to figure out to add it back in. And I'm assuming this because a lot of my clients have worked with multiple exchanges and have created a somewhat of a nightmare for themselves in terms of preparing their 8949 and Schedule D. Now, one of the things you have to do is, let me back it up a little bit. So here, when we have our form 8949, we generate gain on the side. And this is actually the income that you made. This gain over here on the right side is actually what you're going to be paying tax on. In this case, the person lost money in all three transactions, and they're very small. Hopefully you were profitable and you made a lot of money there. However, this Schedule K is going to show up as income on your tax return. It'll be like an extra $978,000 on your tax return. Well, first of all, you didn't really make that amount of money because you also had purchases, and it's really more of a one-sided view. What you need to report are what's on the 8949, the gains. How do we fix a tax return so that the income doesn't show just what we gained, but also this enormous number here of 978? What you have to do is back it out. You have to back out. This is a manual adjustment. And what I'm showing here is what a manual 1099-K would look like. Now, you don't really create this paper document, but if you're using TurboTax or Tax Act to create your own tax return, or if your accountant is doing it, you'll need to tell him that they need to back out the 1099-K because it was not income. Most people would have, like if you were on eBay and you got a 1099-K, that would reflect how much money you made on your eBay sales, to which you would have expenses, you subtract it out, and then your gain. That's all business income. But this is different. This 1099-K from Uphold, the way the IRS wants it, does not reflect business income. It's capital gains. So we want to correct it by doing the Schedule D, the Form 8949, but then you need to back out the manual adjustment. The reason you back it out, as opposed to not entering it in the first place, is because your electronically filed tax return notes that you had the Uphold 1099-K entered. When the IRS computers do checks, they look on their list of 1099s they got, and they want to make sure that you accounted for all of those. So you want to enter the Uphold 1099-K. Because it's inaccurate by itself, you need to add a manual 1099-K. You back it out. So does that make sense? You're backing it out. And you see here in red, I've entered a negative number, negative 978,112. For the name of the filer, I just entered manual adjustment. And that's really all you need to do. If you're working with a CPA or a tax preparer, hopefully if they're accredited, they would understand what this means. You'll know it too, because if it's left in there, you're going to have a very high taxable income. So let me answer some questions that could come up a lot with regards to the taxation on cryptos. First of all, every crypto transaction is a capital gains. It's just as though you sold stocks. If you held the stock for a long term, over 1 year, it's considered a long-term capital gain, and it's taxed at 15 to 20% of your income, or tax rate. If it is less than a year, it's considered a short-term gain, and the gain is taxed like ordinary income. Now, one important concept is that we believe that all these transactions, whether they're a sale into fiat currency, US dollars, or whether you switched it into another coin or an altcoin, these are all taxable events. Now, we pay tax when we sell something. You do not pay tax when you buy it. It's capital gains tax occurs when something is sold or when you exchange it. Exchange is actually the selling of one and the buying of another. So if you transferred coins from Uphold or from another exchange to a wallet, it will look on that exchange as though you sold it, possibly. But the fact is you didn't sell it. You merely moved it. There was no change of value. It's still your coin. It remains your coin. So if you're doing your taxes, you'll find that this is a problem. It'll start to appear as extra transactions, extra sales happening, which didn't really happen. Another important topic of discussion on blog sites about taxation is this whole issue of, when I go from, say, Bitcoin to Ethereum, is that really a taxable event, or is it a like-kind exchange? There's section 1031 of the tax code allows for like-kind exchanges. And the idea is that there are certain circumstances, often it's real estate, where I might trade this piece of property for that piece of property. And instead of paying a gain then, I merely move the basis cost along to the next property. Well, a lot of people have acted in this past year as though that was the case, that they never had to pay tax on switching of one coin to another. In fact, we do not believe that that section of the code applies to coins. And let me give you 3 examples. One, if I have, say, Google stock and I want to swap it for Apple stock, that is a taxable event. I sell one, I buy the other. It is not a like-kind exchange. Even though they're tech companies, even though they're stocks in corporations, they're not of a like kind. If I wanted to swap silver and buy gold, that is not a like-kind exchange, according to the tax law. And if I had, or be a little agrarian here, if I had a male cow and I wanted to swap it for a female cow, that is not a like-kind exchange, despite the equality of the sexes. Under the law, that's not a like-kind. So therefore, Bitcoin to Bitcoin Cash are not like-kinds. Ethereum to Ethereum Classic, they're not like-kinds. Bitcoin or any coin to another coin, these are not like-kind exchanges. This rule does not apply no matter how much people want to talk about it in the blogosphere. Another important tax notion is the idea of the wash rule. The wash rule does not, in our opinion, apply to currency transactions. It does apply to stocks. The idea of a wash rule is that if I had a stock and then I sell it and then I buy the same stock back within 30 days, that I cannot use that to reduce my costs. I have to treat it, when a wash sale, I just ignore that the sale even happened. We don't believe that applies because the specific terminology of the law specifically refers to stocks of corporations, which of course is not what a coin is. The next important topic of discussion in doing taxes is, do I have to use FIFO, or can I use some of these other methods like LIFO, and people get creative, or a secret algorithm for reducing your taxes? The idea of FIFO stands for first in, first out. And it has to do, in the word FIFO and LIFO being last in, first out, these are used in a variety of contexts in accounting, but we're only interested, like it's used in terms of inventory. You know, if I go to the grocery store, you know, the grocer is going to sell his oldest produce first, not his newest produce. So they're using a FIFO in terms of stocking your grocery store or the pharmacy. And the law specifically states that when you have a bunch of stocks, in this case, coins, when I sell one, it's the oldest one that I sell first. So there are no other methods permitted. I could go into certain variations where it happens, but they, in a coin cryptocurrency environment, they really don't apply. And anyone who suggests using a LIFO approach to get a reduction in your tax is basically saying use this method that's not allowed for you under the tax code to falsely come up with a lower tax. And what that is fraud. Now, if you traded, here's the next point, is that if you traded on foreign exchanges, you may have obligations to file a FBAR or FATCA form. Now, Uphold, although being an international company, as far as the U.S. is concerned, it is a U.S. exchange. But if you worked on Binance or Bitstamp or hundreds of exchanges in foreign countries, you fall prey to certain laws that most domestic Americans have never heard of. It's actually, you know, I only deal with Americans that have foreign filing obligations. I do these all day long. I filed hundreds of them. The FBAR stands for the Foreign Bank Account Reporting Act. It came out in the 1990s, the Bank Secrecy Act. Basically, if you have a combined total of over $10,000 in foreign banks, brokerages, and exchanges, then you need to report all your holdings, the maximum value you have in all your holdings. Now, this is a very easy number to hit, and let me tell you why it is important to file this form. If the IRS decides that you should have filed this form and you didn't, the penalty, now there's no tax on filing this form, but the penalty is $10,000 the moment the IRS issues you a letter saying, why didn't you file this form? Then there's an additional penalty of 50% of the maximum amount that you had in those accounts during the year. That's right, I said 50%. So if you had been holding foreign accounts for 2 years and amounts in foreign accounts, it could be you could be completely wiped out financially with regards to these investments. And of course, you know, with we're talking about the maximum amount. So, you know, in our bank accounts, things spike for, you know, a day or two or a week, and then we take the money out. It's the highest number that they're going to come after. And this is very important to get this right. The FATCA law is a variation on that. It's called, it's on Form 8938, and it's broader than the FBAR law. And it's if you have over $50,000 overseas, not just in banks, brokerage accounts, and exchanges, but also in foreign assets or investment contracts where the counterparty is a foreign person. Or I would rephrase it this way: you can't prove they're American. So you have to report your foreign holdings. So this creates an interesting situation if you were using like a shapeshift or an Ether Delta exchange to move money between parties to, you have no idea who you just traded with. And therefore you have to assume they're a foreign person. So on the FATCA return, I recommend my clients report the highest amounts of everything that they held in Bitcoin, Ethereum, and all the other coins, that they report those on the FATCA form. FATCA form, similar penalties if you don't have it filed when the IRS recognizes it. They issue you a letter. It's a $10,000 penalty, and if you don't respond to them, that penalty grows to $50,000 plus 50% of the unreported amounts. Just to give you an illustration, this law has already been tested. A man had $800,000 in a Bermuda bank account. His name was Charles Werner. He more or less, it was $800,000 year after year, didn't report on his FBAR, and the government fined him $3.4 million. That's right, almost 5 times the amount of his bank account. So this is a very serious law. It's actually almost more important than filing your tax return when you consider how staggering it could be. Let's think about this. Now, the IRS, through the FATCA law, is not only finding out about how much people have in their bank accounts or their exchanges in the US, but they will be finding it out worldwide as this law ripples through and coordinated government enforcement actions happen. They will then find out, oh, here's a person, Pace Ellsworth. He was trading on the finance exchange. Oh, he did about $60,000 at peak. Let's do a real quick, and this is a simple data mining exercise. They go over, they look at Pace's tax return, and they go, does he or does he not have a Form 8938? Did he file a Form 114? Did he file the 8949, the capital gains list? Did he or did he not? And if the answer is no, you're dead. They're just dead. I mean, gone are the days where you'd sit down with an IRS auditor and you'd talk about receipts. You're dead. And the penalties are staggering. So these are not laws you want to play with. And I'm telling you about this now because I specialize in Americans offshore. Domestic U.S. CPAs and other tax preparers are generally unaware of these filing obligations because less than 0.4% of all tax returns even have one of them. So most accountants may never encounter one in a tax year. And if they did, it might be only 1 or 2. I filed 200 of them myself. So be wise, be informed, protect yourself. Don't assume that your accountant knows everything. The next concept is, what if I gave a gift of crypto to someone, a brother, my parents, kids? Do I have to pay tax on it? And if it's under $14,000, you don't have to pay tax. You don't have to report it. If the gift is over $14,000, then you have to report it on Form 706. This is like it's called the gift tax return. And you are entitled to a unified gift tax of almost $5.5 million in your lifetime, which includes your inheritance. So you hope that, if you have your inheritance that your children inherit is less than 5.5 million, then there's no tax on it. But if you give gifts during your lifetime that exceed this 14,000, and next year or 2018, that number is 15,000, they have to be reported, and they go against and reduce that lifetime unified gift that you have. When they've talked in the news, especially when they were revising the tax code, they talked about the estate tax, the federal estate tax. That's what this is. So you have to report it. What if you were mining coins on your own? You bought some mining equipment or paid into a service and you got income. How do I report that on my taxes? Well, it's business income. So it's reported on your Schedule C if you're a home business, and you report the income, and all your expenses related to that can be entered in there as well. What if I use Bitcoin to go to Bitcoin gambling sites? Well, if you're one of those people who are lucky enough to win money, you get the pleasure of reporting your winnings on your tax returns. However, if you lost money, you cannot deduct. So gamblers get the raw end of the stick here, but you report that on your 1040 page 1. So those are some broad aspects about the taxation of cryptos. I went through it quickly. I'm sure there's questions, things I didn't touch on. But that's there. Let me give you a big picture. If you are one of those that's tempted to using a different method than FIFO or not reporting all your exchanges, that the IRS has mountains of computers and data storage systems, and they just use them to grind away. The Department of Justice International IRS Crime Unit came out and said that they were already firing up the computers to grind away to find these relationships. There's a big focus to going after non-reporters who aren't reporting their overseas assets, particularly overseas exchanges, as I just talked about. Sleep better by being honest. When you sign your tax return, whether you do it with ink or electronically, you're declaring that the return is true, complete, and correct. So that means you should pay the correct tax. If you choose to use LIFO to calculate your capital gains, it would not be correct. Now, you may pay less, but if you're caught, you will pay all that you should have paid plus more. How much more? You'll probably pay between 55 and 60% more penalty. So it's not strictly, shall I save money by shaving corners here? No, I'm also taking a risk of paying significantly much more here, 50 to 60%. Secondly, the statute of limitations, currently 3 years on a tax return, is then opened up when they catch somebody who's underreported by $5,000, and they can now go back 6 years to look for more problems. You don't want anybody who works for the IRS to be looking at your tax return for problems. Just trust me on that one. They can find things, even if they're small. Secondly, if you get caught in an audit, your name is forever red flagged. You should expect triple the normal frequency of audits in your lifetime. Again, not good. If they feel that the amount of money that you haven't reported is significant enough, they could hit you with a fraud penalty. I have clients that I'm working with who made, like our example on this 1099K here, yeah, they actually made over $1 million, one person, $2 million in capital gains, and never thought that they'd have to pay taxes on it. So now they're faced with the potential of having to liquidate maybe $1 million worth of that. Of course, it's not worth $2 million anymore. It's down to what, 1.5 million. So they're looking at liquidating well over half their positions just to pay taxes. You'd consider, shall I cheat? If a large person, like a person with a large gain like that, would then be considered, the auditor could say, this person engaged in fraud. It could hit you with another 75% penalty on what you didn't pay. If it's large enough, if you did it over a couple of years, they could hit you with tax evasion if they felt it was very intentional. It's a $250,000 penalty and up to 5 years imprisonment for each infraction. So I just want to paint the picture here that it's not simply a matter of, shall I shave my tax return a little bit? The downsides of being caught are amazing. So I hope I covered a lot of ground very fast. I hope I haven't scared you too much. I hope you've waken you up. But I work part of the time with a company called CryptoTaxPrep.com, one of the few companies out there that's really doing crypto tax preparation. If you've worked with many exchanges, if you work just with Uphold and you've gotten the documents that we looked at earlier, you're in a sweet position because they've already calculated the gain and the loss on all the transactions you did. And creating that 8949 is a real breeze. But most people, started on Coinbase, they went somewhere else, they, shipped money to, Binance, Bittrex, and, all sorts of things. And now they have to reconstruct these records. So what we do at Crypto Tax Prep is we use a tool to help us collect all these transactional records. Well, but it doesn't end there. Then we do the hard bookkeeping and accounting work of trying to reconcile those records making sure we've eliminated duplicates, missing records are taken care of, that every sold coin has a purchased coin that's paired up with, so we have a definitive list of your transactions from which we can generate the Form 8949 for you, as well as determine if you need to file FBAR in the FATCA form. So we have 3 packages based on the number of exchanges and transactions if you need our help, all the way to someone who would be like a high frequency trader using bot trading. They would be our platinum customers. Most customers get a base where they've worked with a couple exchanges under 1,000 transactions. Because you've participated in this webinar today, Crypto Tax Prep has offered to give you a $100 credit or a promo to reduce these prices. So you can save $100 by using the promo code U100 when you purchase some of their services. In addition, if you have a more complicated situation, I offer my consultation services. The address at the bottom is a way to schedule an appointment for a $60 half-hour appointment to discuss your unique tax situation, be it crypto or whatever. So if you use that address, you pay $60 up front and you can schedule an appointment on my calendar. So I leave that there. I now open it up for questions, Pace.
Okay, so I've got a couple that I picked up on that maybe just answer first before we get additional questions and go over additional ones. If it's mid-March and some may have already filed just ignoring their 1099 or their Uphold, transactions, the correct path would be to file an amended return then.
Yes.
Would that be right? Okay.
You would file an amended return. And an amended return is basically a replacement tax return with the stuff you wanted added in. And then you put on top of it what's called a Form 1040X. And 1040X, you basically say, this is what I said before from a number, the key numbers, income, taxes, and along with the correct numbers to show the delta that you either have to pay or get a refund on, along with an explanation. And that has to be mailed in. It's not electronically filed. Yeah,
but any tax preparation service or a professional tax accountant should be able to help you with the amended return.
Yes.
Okay, so the FBAR and the FATCA, those fees and fines, those were exorbitant, very scary. Just to clarify for everybody again, that does not apply if all your financial activity for the year was in U.S. accounts with U.S. exchanges.
That's correct. If you were on Uphold, Coinbase, Kraken, these are U.S. ones, you're not really vulnerable to that.
Okay. Now, most people that are in Heleum have hundreds of transactions, because if they qualified for the 1099K, would it be best to provide the gain and loss statement properly formatted? If we need to adjust the formatting, we can go over that a little bit more. And then just say that's exception 2 for the 8949. So you don't have to copy in every single piece of information into those rows, because that would be dozens of pages of 8949s.
Right. Hey, take the spreadsheet, give it to your tax preparer, make it their problem. Now, if you have to do it, most tax software, professional grade tax software that I use, allows us to attach a substitute 8949. It's got to have the exact same columns on it. And then you base on the Schedule D, 8949, you're simply writing an aggregate total. So you would say Uphold aggregate, and just write the bottom totals for all those columns if you added all the transactions up. You're isolating short-term from long-term gains, of course.
Right. Okay, great. And then because the 1099K is a report of the total volume that you had, all the applicable volume that they chose to report, that includes things like when you bought crypto. So when you went from dollars to to crypto. It even includes when you move dollars from one card in their system to another card that's also US dollars. So technically you bought dollars with dollars. Would that be something that you would include in the 8949 so that all of the proceed volume matches up at the end? Or would you just show the round trip trades or the times when you exited a crypto and sold it for something else?
Right. And this is the problem with the number that comes off the 1099K. It really has no connection to anything that really was going to show up on your tax return.
So basically what the since you'd say Uphold on there, or you'd report these transactions that happen on Uphold on the 8949, backing that out is sufficient to say this number isn't applicable to my income. And if they ever asked about it, you'd be able to show that, the gain and loss statement shows all of these trades actually is what that 1099K volume refers to.
Exactly.
Okay.
Exactly.
All right. So back it out, and then that total number doesn't matter anymore. Just report the trades properly as you would, with a stock exchange.
Exactly.
Okay. All right. That's very, very good to know. So could you go back to the slide where you back out the 1099K? And that's backing out the full value of the previous 1099K, right? Because you don't want them to look at the differential or of that value at all.
Exactly. Yes. So let's say you're doing your own taxes. You have a Tax Act, and it says enter in your 1099Ks. And, you do the first one. It says Uphold HQ, and, the filer identification, some of this information. And then 1A is the only box that they want. They don't want any of the other boxes.
Right.
Type in that number. And so you're just going to manually pretend, like I've shown here, that you got another one. For the name of the filer, you just make it say manual adjustment, so that's very clear when they see it. And then you did you subtract the amount that you're subtracting out. There's hardly any other information you need.
And for everybody on here, I have a copy of this presentation, so I can send you this image as the example. One person asks, would moving to Puerto Rico reduce their tax liability? What is you're a world traveler. You spend a lot of time in Panama and work with a lot of people that have offshore banks and stuff. But Puerto Rico is a unique case. What is there any benefit at all for a U.S. citizen born in Michigan, with a Michigan driver's license to go to Puerto Rico?
I have a Puerto Rican client who doesn't recommend living in Puerto Rico. I mean, I don't, to benefit from the Puerto Rican things, you have to live in Puerto Rico at least 6 months of the year. You have to have a company there. And, Puerto Rico has suffered incredible devastation lately. There was a hurricane that came through, I think this year or last year, that really, really devastated that country, devastated the infrastructure. It was a full-on strike. Not a rich place to begin with, and the government is broke. So, doesn't really have the financial means to recover from itself. I think it declared bankruptcy, however you do that as a country. So, if you have a deep passion for Puerto Rico, you should be living there already. But let's step back. America is unique in its taxation system worldwide in that we tax our citizens on their worldwide income regardless of where they live in the world. Now, what's unique about this is that we tax you even if you're not living in the country. Most countries in the world are going to tax people either on the money when they're living in their country over 6 months of the year, they're going to tax them on the money they make either just in their country, or the more common case is on your worldwide income. I mean, right now I'm talking to you, I'm in the country of Spain. If you're in Spain for more than 6 months, they want to tax you on your worldwide income. Your U.S. pensions, U.S. tax holders, and you have to report all these things. I was down in Colombia, and they have the same thing. If you're in their country 183 days in a 365 window, they want to tax everything that you have. So this is a very tough situation. If you're American, you go overseas, You create an interesting obligation because you may have tax filing obligations in the country you're in, but you also have tax filing obligations back in the US. And let me tell you that the FATCA law obliges every bank in the world to report to the IRS the maximum holdings of the accounts that any American taxpayer has every year. So this is quite a shock to most people, but who go overseas, and most Americans don't realize this law came into place in 2010, and it's really gone alive in the last 2 years. But you cannot hide from the IRS. There are some great tax breaks living overseas. I will tell you about that. Give me a call. I'll give you a consultation on that one. But you can really slash your taxes down and reduce your cost of living. But I would not move solely for that reason.
All right, I muted myself due to family obligations, but thank you for that answer. I want to go through. Let's see. Let's double check, Kathy. On the back out 1099K, do we type in each month's data also? No.
No.
Not
No.
relevant. Yeah. Since those monthly dates don't have any effect on a tax return anyway, you can ignore that, right? Will you be sending out a document step-by-step process of what forms we need to file and how to generate those values? Yes, I'll do that for people that got 1099s and those that didn't if they choose to file 8949s. I said if you choose to. Now that's my words, okay? Any tax professional would say better safe than sorry. Report every income that you got because Uncle Sam wants it all. That's all I'm going to say about that. So as far as another question here, Uphold sent us 40 pages of transactions for 2017, and that would be like 40 pages in that gain and loss statement if you had, hundreds of transactions. Do we need to write in all of these transactions on the Form 8949 to show our cost versus actual proceeds? Can you go back to that slide with the 8949, and then I'll share my screen after that and show the actual document. So this would be if you only had a few trades, you could outline them one by one. Anybody in Heleum is going to have hundreds of trades, or at least over 100. And if Heleum was your only use for Uphold, then it would be almost all of your Uphold trades. But no, you would not have to put them all in there. The purpose of that statement, the gain and loss statement, is to be a substitute statement for a 1099B, which would, and so it provides all of the gains and losses in there. It should be enough. It really should be enough to provide as is.
So let me put some color on that.
Yeah.
You have to report every transaction.
Yes.
Okay. And if I issued a trade, let's say I wanted to sell 10 Bitcoin, but I didn't actually sell it as 10 Bitcoin. I got, this guy bought 2, this guy got 4, this guy got another 4. That's 3 transactions. All 3 of those have to be reported. Not in your mental mind where I just one transaction, I sold 10. Every single transaction that went down has to be reported. Now, that being said, you can look at 8949 here. It's just a glorified spreadsheet, all right? So you can use it's called the exception 8949 rule, where you can create a spreadsheet that just has these fields on it. So, you don't want anything other than these pieces of information. You can create a spreadsheet, and your tax professional can attach, if he's using a professional grade software, can attach that to the tax return. It goes on the back. Okay, I got clients who are going to be having, tax returns that are looking at 200, 300, 400 pages long because they're all, this form. They did, tens of thousands of transactions. So, yep, you got to report every single one of them. And the spreadsheet would probably be your preferred way to do that.
Yes. Okay. So so I'm going to show real quick how you would summarize on your 8949 and then just attach the gain and loss statement. Okay.
Okay.
Let me go ahead and share my screen. It'll stop showing yours, and we'll go from there. Can everybody see this?
Yes.
So, okay, great. So you put your name on here. You'd put your social. Okay. And then those are not my actual last 6. And you'd put on here, which one would you put here? Short term not reported to you on Form 1099-B?
So you're going to have to break down.
Or here, because the transactions were not reported to the IRS individually, just the statement was given to the user. But it serves as kind of a substitute statement. So either B or C.
It would be C.
Okay. All right. Because you did not get an actual Form 1099-B. We'll look at it that way.
Right. And I would say,
yeah,
you would need to break this down. You need to separate the short term from the long term.
Okay. Yeah. For if all of your activity is Heleum in Uphold, and then it's pretty much all going to be short term. Okay. For everybody. If there are any exceptions, you have to break it down. So you could break it down. Page 1 is short term on an 8949. Page 2 is long term. So you'd enter this on 2 separate pages if you had any long term. But for now, you just put Uphold, see attached statement. You'd leave these blank, and you put the total, the sum of all of the gains, or the sum of all of the proceeds for the trades involved, and then the sum of all the costs for the trades involved. Now, to get that number, it's not going to be super easy peasy, but I'll show you how to do it here, and then Clinton, you can confirm. And we've got some minutes left. You put an M here, and I think you'd leave this blank, and you'd put the difference here. So in this case, the difference is 32,000. Now I'm grabbing this for the instructions here. It says how to do exception 2 on the instructions. And it says just enter the name of the broker followed by the statement C attached statement. In column A, leave B and C blank, enter M, and then enter stuff in D, E, F, G, and H if they apply. Okay, so that's that. Now, if I could get to an example of the a user's, let's see, cost basis report. Okay, so this is a lot. I mean, this might look familiar to some people. What he was saying about one transaction having 3 outputs is actually 3 transactions. Uphold does break that down. So they break it down. Let's see if I can make this bigger. So if there was one transaction and it went, it came in as one, transaction into crypto, but it went out as to 3 separate transactions, then they break it down on that. The transactions are not accounted. They're basically accounted something like FIFO on this statement. The way we track balloon progress in Heleum is different. It's based on like a specific, what's the word for that? A specified basis, basically. Because we're tracking a specific packet of information, but you might have one balloon go into crypto and another balloon goes out of it. So Uphold would look at, they don't look at it in terms of balloons at all. Okay, they just report. The gains work out to the same as far as short-term gains, though. So, but yeah, you would only be reporting things that you had, a gain or a loss here, because these are the actual short-term trades. So for these ones, you'd sum up what's this plus this plus this plus this as the proceeds. And then you'd be summing up, the costs as well. That plus that plus that plus that. Only the ones for the trades. Does that look good to you, Clinton?
That's basically the concept, yes. You have this report lists a lot of things, especially coming in and out of fiat currency.
Would it make sense for you, if you were to attach this statement, to delete any rows where where those are not actual short-term round-trip trades, or would you think keep those in there for context? It's a little complicated.
I'm a little hesitant on that one because
Yeah. Okay. Well, if you want,
the principle is that we have to report every transaction. Which transactions do we report? We don't report buys.
Yeah.
What we report is a sale or an exchange. If we report that sale, we have to report the price we also bought it for.
Yeah, and that's supplied in each row where it has everything is self-contained in the rows where it says there's a short-term holding period. Okay, so you could only report what was involved, what you would transfer to one of those to those empty blank spaces in the 8949 anyway. Hold on one sec.
Okay. Any other questions?
Let's see if there are additional questions. Is the $600 minimum for 1099Ks in place with Uphold? So $600 refers to a 1099 miscellaneous or other form of other income. The 1099K has those specific minimums: $20,000 in volume, 200 transactions. So that's different. You wouldn't get a separate. I think your other question, Eli, was a separate. Is there a separate 1099 for long-term trades? No, it's all in the same. The 1099 doesn't differentiate between short and long-term trades because it's not meant for. The 1099K is not meant to track trades. That's what a 1099B is for. That's what the gain and loss statement that Uphold provides for you is also. And again, if you haven't seen that gain and loss statement, you'd go to your Uphold account, and let me see if I can pull up an example of that. You'd go to your Uphold account, and you click on Activity. And let me share my screen again. And thank you again for giving us your time, Clinton, today. Let's see if I can move this out of the way. So you see basically here is where you click on you log into Uphold and you click on Activity here. To download your statement, it would be right here if you got a 1099K. If you didn't, it won't appear. You won't have a gain and loss statement from Uphold. If you choose to report your transactions, you'd have to download your transactions as a CSV and work it out yourself, basically. Format it into a statement and submit it with your 8949. So this is primarily concerned with people that got a 1099K because that figure is reported to the IRS and you'll need to justify it. The way you justify it is by backing it out and supplying all of your transactions on the 8949. Okay, so that answers that question, but jump in if you need.
Well, actually, I'm looking at a question here. It says, do we get 1099s for unrealized gains as well, hodling? Well, no, you don't. The 1099 is issued when, well, you're saying the 1099K might involve the original purchase price, but you don't have to pay any capital gains, which is what we're really interested in, until you sell it.
Yeah.
If you're sit on it for a long time, it becomes a long-term capital gain, and then when you do sell it, it's sold at a lower, it's taxed at a lower rate, which is a real benefit.
So that might be a reason to leave that transaction report that you bought that in that statement. If you wanted them to see that, yeah, there was a big volume associated with you buying, this amount, but it was never sold in that calendar year.
Okay. Another question. Is a taxable event when you use your Bitcoin to buy something? How about if you donate it? Great questions. All right. So if I talk to a guy who runs his entire life, a couple customers who run their entire life with Bitcoin, they buy and sell things. Well, when I buy something with Bitcoin, two events are happening. One is I have an asset that I'm now liquidating, and then I'm actually buying it. So that liquidation of that Bitcoin is a taxable event. It's capital gains. Now instead of taking it to cash, I'm buying something, and that whatever I'm buying, maybe it's a business expense or maybe it's income for somebody else. But yes, it's still a capital gains event. Unless you've only held it for a couple days, then it's still a capital gains event. How about donating Bitcoin? Yes, you can donate stocks, you can donate cars, you can donate Bitcoin and other currencies. What's involved? There's a special form that's reported, depending upon the size. I believe it's over $250. A special form has to be submitted and acknowledgement from the recipient if it's a 501c3 charity. If it's not a 501c3 charity, then it's treated under the regular gift tax rules. When you give it to them, you have to declare what your basis or what your cost was when you gave it to them. So your tax preparer can help you with that. Another question is, another enrolled agent told me to just report monthly gains in summary. Hey, that's a great question. To answer that, I'm going to turn it back over to Pace. You showed us the instructions on Form 8949, Pace. You had displayed a screen, and it had the answer to this question on it right there. Can you take over the screen and show it to
I can bring it back for you. If you need me to scroll, let me know, but here it is, right here.
Okay, all right. Now, you see the highlighted dark blue on the right side? If we skip down to the paragraph underneath it, it says, don't enter available upon request and summary totals in lieu of reporting the details of each transaction on part 1, part 2, or attached statements. All right. What this is telling you is you have to report every single trivial, petty little transaction that happened. All right.
You'll need to send them the transaction history somehow, the detailed transaction history. You can well, I'm just saying you can put see attached statement, but it has to attach all of the details of each transaction, right?
Yes. That's kind of what we're talking about. The attached statement can be merely an Excel spreadsheet that has the information that you've provided, but only the columns that the IRS wants. So don't give the IRS other columns. Don't make them think. Give them columns that match what you're required to put in those columns. And that's what the attached statements mean. See, so this is all included there. So what that person, that other enrolled agent was basically saying, giving summary totals in lieu of reporting. No. Not good. So, all right. So what was the next question on that list? Or you can give it back to me.
Yep.
Just to confirm, holdings in an Uphold Heleum account does not trigger an FBAR or FATCA filing requirement. That is correct. Because it's a U.S. exchange and Uphold and Heleum are reporting to the IRS, that's why you're getting a 1099-K. So foreign banks, foreign exchanges don't have that obligation to report to the IRS that way. So that's where the FATCA law comes in. So now the purpose of the FATCA law is not just to harass taxpayers. It was designed to enforce anti-money laundering regulations. It's international, all countries are working towards doing this. And, report it so you don't look like a drug trafficker, a terrorist, organized criminal, okay? So is the gain and loss statement we receive, should we attach it as is? No, we do not want to send them unused totals.
Yeah, it's excessive. Yeah, I was looking at that the other day, and let me see if I can compare between the two. So the 8949 here. Let me open up before I share the screen. Let me open up the raw gain and loss statement if I can find one here. Okay, hang on. While I grab that, the one I sent to you. There we go. Okay, so I'm going to zoom in on this a little bit, and
you need to take the screen.
Yeah, I will. Okay, so this is this is pretty big, and there's a lot of information you don't need. I mean, maybe we can leave some of the columns in if they provide clarity, but don't leave anything in if it leads to more confusion. So I'm sharing.
No, don't tell the IRS anything they don't ask for. Don't confuse them. You know, I could say something derogatory, but just simply suffice it to say, don't make them have to think. Make it easy for them. Put the letters of the 89, like here you have the.
Okay. So all they're looking for.
You need to make that, those all need to appear. These column headings here should appear on your spreadsheet.
Yeah, it'd be better if you rename stuff and clean it up. So right here, description of property, you're looking for what was sold, okay? The information for that is found here in the transaction description column. Okay, so it says transferred from 0.35 Ether to something else. That might require some cleaning up of this column. That's a good question, but definitely columns to just straight up remove. Let's look at the 8949. The date acquired, you need that. The date sold, you need that. You need the proceed, and you need the cost basis, and you can calculate the gain and loss from that. But they provide that too. So to take out everything else means taking out. You don't need the transaction ID. That's just a reference to find it on uphold.com. You don't need that. Here's the date sold right here. So you need to move this just over to the right. This total transaction amount is irrelevant. This right here, irrelevant. Get rid of the source transaction. Get rid of the source amount. Keep the date acquired. You don't need the purchase price, the sale price. Just use the cost or other basis. And use the proceeds and use the gain and loss. And that's it. You don't need the percentage. That's not helpful. And since you're reporting everything under the short term, the statement is for all short-term trades only. You need to separate the two, short-term and long-term. Then you don't need this column either. So only keep the columns that match perfectly with the 8949. Of those, the only thing that doesn't match like totally perfectly is the transaction description, because it says transferred from something F to something dollars. But that's clear enough. I think you could probably leave that description alone, and then just and I think the transaction the columns are pretty much the column titles are pretty much good enough too for those columns. You just need to get rid of the rest of them.
Okay. There was another question on there was if I had $5,000 in Binance, would that trigger FBAR FATCA filing? Hey, let me play with that example a little bit more just to make you cognizant. Is that let's say I had $6,000 in Binance, and then I took that $6,000 out and I moved it over to another exchange, Cryptopia, let's say, a foreign exchange. I moved 6,000 over there. So how much did I have in foreign bank accounts, maximum amount in each account during the year? The answer is 12,000. It's not 6,000, it's 12,000. Feels like 6,000. There was never more than 6,000, but the correct answer is 12,000. Therefore, you'd have a filing obligation. So your answer that Chris brings to us of 5K in Binance, if that were the only foreign exchange you worked with, then yes. But
it might not trigger FBAR FATCA if that was the only one you had and you only had 5,000.
Exactly.
Yeah.
Another question, and it's really a vague area of the law, is what if I use the Shapeshift, which is a foreign market for exchanging coins? Same thing with Ether Delta. These aren't, they're kind of like exchanges. Are they foreign? Yes. Do they create a foreign filing obligation? Yes. Well, what's the maximum amount? Well, it gets complicated, but rest assured, err on the side of being cautious and over-report when it comes to FBAR and FATCA, because nobody is going to be thrown into jail for over-reporting on those forms, right? And since you don't know how the IRS is going to call it, I tell them everything.
Yeah. Because simply reporting what your total assets were, what your volume was, it's not a necessary report of what your taxable income is, right?
Right. the IRS's logic and the reason for the big penalties is that they believe that people who don't report are engaging in money laundering. Money launderers, okay, so I've got, you know, a Mexican drug cartel that's made millions of dollars selling drugs into the U.S. They got to get the money out of the country. Do they just go down to the bank and move it? No, they have to hide it through otherwise innocent-looking people, you know, retired couple who are moving, you know, a little money there, a little money there, and they don't report it. That's how you move massive amounts of money these days. In addition to moving into cryptocurrencies, you know, they need to hide things. So behaving in a hiding manner is the way criminals behave. So the answer to that is report everything. The FBAR is related to the Bank Secrecy Act, and the FACTA law is related to the anti-money laundering laws. They're all about capturing criminals. So those two forms, just be excessive, be forthright, be blunt, add additional comments, you know, protect yourself.
Okay. Okay, cool. Anyone ambitious enough to create a couple Excel formulas to filter the Uphold spreadsheet and select the necessary subset for alternative 8949? We can do that. We were thinking of doing something much more complicated, but if it's as simple as just removing rows and columns, we can easily do that at Heleum. And so we'll what I'll do is I'll just make a public spreadsheet we can work on, Ben, you and I at least, and anybody else that wants to get involved, and I'll just share that link to our Facebook group, and then we'll go from there. We don't have access to the gain and loss statements unless you provide those to us, okay? Because only you can download them from your Uphold account. So if you want to send it to us and we'll edit it and send it back to you, we could do that. But you need to compare, you know, before and after, make sure it's still accurate. Are crypto holders who file more likely to be audited? What's your opinion on that, Clinton?
I would say crypto holders, period, are more likely to be audited. The IRS has 4 of their 13 initiatives this year is going after foreign assets and foreign holdings. And so, as I said before, they're pulling the Coinbase data, and they're going to see who are these people and did they file a Form 8949 to report their capital gains. That's a simple test, and they're rest assured, if Coinbase has turned, and of course Uphold has turned your name over, an IRS computer is going to run your name and look to see if you filed. So by all means, if you haven't filed in previous years, in 2013 is too late to repair. 2014, you have until April 15 to amend that. And 15 and 16, you can go ahead and amend it. I would strongly recommend you go back and amend your tax returns to add 8949 and do it as fast as you can before the IRS gets their computers all revved up and they start sending out letters. Yes, likewise, they're finding out about foreign bank accounts are going to trigger searches to see if you did the FBAR and the FACTA forms. But yes, holders of crypto, not filers, but holders of it, will be you know, your returns will be checked specifically.
All right. So it's important to be accurate and you know, not report, because right now if you don't change anything, you don't back anything out, and you don't provide the transactions, all the IRS thinks is that you made, you know, hundreds of thousands of dollars. And so you definitely want to be accurate and submit accurate forms. If a 1099-K was submitted, if you got one, that means the IRS has one. And that's all the information that they have on your crypto activity. But yeah, that said, anybody that didn't get a 1099-K, I wanted to make sure if anybody was on here that wanted to know if they didn't get one for 2017 because they started Heleum late, whatever, they didn't have enough activity in Uphold to get one. The IRS doesn't have anything on you from your Uphold activity. You can still submit an 8949 with a detailed transaction list. You would just need to export your transactions from Uphold and identify the costs and identify the proceeds and submit that unified list to the IRS. You can do that. And any other questions? Is the value identified in backed up 1099K, the short-term gain loss statement identified in cell B24? No. The value on the backed up 1099K, the manual adjustment, would be the negative value, the same exact value that they gave you on the 1099K with a negative sign in front. What you have here in B24 on this example is the short-term gain. It's the actual taxable income. So the 1099K is not a figure for the actual taxable income. If you provide the actual transactions, which provide the actual proceeds minus the costs, which is the actual gains. So the value on the 1099K, if you make the manual adjustment 1099K, you want to make that the negative value and not the one that's in B24, the short-term gain and loss. What's in B24 of short-term gain and loss is what it should show up at the bottom of the first page of the 8949. That's the figure you transfer onto the Form 1040 Schedule D to report your capital gains earnings. In my file, it displays transactions for 2018 as well. That was there. They shouldn't have. Whoever created that statement, it says at the top the statement date is ending 12/31/2017. Yet they show you the transactions for 2018 on there. I would just delete those rows. They're irrelevant for the report. Is the cutoff for the taxable portion the last day of 2017? Yes, it is. The difference is $1,200 in gains versus $6 in gains. Yes, I fully recognize that. It's very unfortunate, the fact that you have transactions after in 2018 where you realized losses, according to that report. You can't use those 2018 transactions for your 2017 statement. Is that correct, Clinton?
Correct. Only the ones closed, sold, or exchanged in 2017.
Yeah. I mean, you could wait until April 15th, hope your value recovers, and then pull your taxable, to pay your taxes, pull it out of your Uphold account.
I got an idea for you there.
But yeah.
Some people are faced with having to liquidate over 50% of their holdings in crypto just to pay for their crypto taxes, which they are loath to do because the market is down and they expect it to go up. What you could do is instead of paying your entire tax bill, pay what portion you want now, and then set up an installment plan, basically a payment plan with the IRS. They're very happy to do this, where a standard amount is taken out every month from your checking account, and it's the amount owed divided by 72, or a slightly higher amount than that. And then do that on a monthly basis until you make some sales, maybe come to November or December this year. Market's high, you can sell them and not have to liquidate such a large portion.
So you can pay your taxes off over 6 years?
Yes. The IRS has an interest rate of 5%, which is very reasonable.
That's very low. Yeah, very low.
I would say this, though, that do not stiff the IRS on your payments. Do not do that. You do it twice, you're dead. Don't leave
that automatic payment. Don't let it get overdrawn, and then they have to call you.
Next thing you know, they've garnished your income on your wages, seized assets. They're the first person you pay is the IRS.
Red marks, yeah. But still, that is a very, very great, something I'd never known or thought of, is to just divide your taxes up into 72 payments. So you could always go cancel the remainder, right? But you could do the full payoff, but that's a great way to push off your tax obligation for years, the majority of it. So that's great.
Well, to be honest, let's face it. Hey, look, you don't want to drag out your taxes, all right? Get them paid, because next year there's going to be more of them, right?
Right.
You don't want this monkey on your back. Get your taxes paid off within a year, but you don't have to do it when it's low. Now, having said that, that is based on the assumption the person's gamble that the market will go up. All right. It may not. It could crash, get worse, in which case you would be liquidating more sizable portions. So it is a risk, but I sense that a lot of people are going to have to liquidate in order to pay these taxes. So there could be at least, I don't know how big the U.S. taxpayer market, and people are going to be paying taxes all over the world, typically in the springtime. So there might be a downward pressure on a selling pressure, at least here in April, on this reason, and then probably continue through for maybe a month or two.
So yeah, and given that that's the case, a lot of people expect it to go back up, the crypto market to go back up in May or April, April, May, June, or July, somewhere around there, as it has in previous years. This is a cycle that's very visible. Its highest point is in December, its lowest point is in January, and then it goes up over time. That makes me think, if you can do an installment plan, aren't there ways to just file an extension, right, for a personal tax return? Can you do that, or?
Yes, you can.
Okay.
You can file an extension. Your taxes technically are due April 15th, whether you file an extension or not. If you do file an extension, you have until October 15th to pay you have to file. If you pay at that time, then you will have incurred 5 months of interest
at 5%. At 5% per year. So that's
not giant, but if you had $1 million to pay, that's all of a sudden it's a big number.
That's one way to get an extra 6 months of crypto gains, and not actually be mandated to pay it until October 15th.
Yes.
So file an extension. How do you file an extension?
Filing extension, any tax software will let you do it, or your professional. Most tax professionals would be happy to file an extension, get you off their run list for April 14th. I generally recommend people always file extensions, because the IRS is using computers to find your mistakes. So they're giving you an extra 6 months to think, to do a correct job, make sure everything's accounted for. And I highly recommend you do that, because you're up against computers. It involves filing a simple form. It's a one-pager where you state if you pay some interest, you pay some taxes now, you declare it then. Otherwise, it's just saying, I'm going to take an extra 6 months. Very easy.
That's great. That's a lot. That takes a lot of weight off people's shoulders if they choose to do that. I'm going to go ahead and end it now, and then feel free, if you have additional questions, to get back in touch with me. You have my email. Everybody in Heleum does, and we can chat. And any additional questions, like I said, if I need an answer on something, I'll go to Clinton. But for now, I think we have everything we need to know to back out the 1099K, fill out the 8949, and go from there. All right, guys. Thank you.
Thanks, Space.
And I recommend, let me make sure, if you want a professional to just help you with this straight away, then if you need Clinton's information, then contact me and I can get that to you. And there was a discount if you were on this call.
Yes.
Okay. All right. Thanks, everybody.